XRP just broke a resistance level that held for weeks, and this time it happened with more than double the normal trading volume. The next few trading sessions could decide whether this becomes a real breakout or another fake move. Stick with me for the next few minutes because by the end of this, you'll know the exact numbers that matter and what to watch for next. For weeks, XRP kept slamming into a ceiling around $1.14. Every time it tried to push higher, sellers showed up and knocked it back down. That kind of repeated rejection usually tells traders one of two things. Either the level is too strong to break, or pressure is quietly building underneath until it finally gives way. This time it gave way. XRP pushed through $1.14, and it did it with volume that's hard to ignore. Nearly 82 million XRP changed hands, which works out to more than double the typical daily average. When a breakout shows up with that much volume behind it, it usually means more than just a handful of traders playing games. It means real money decided to show up at the same time. Market analyst Vlad Anderson has been tracking this move closely, and he's pointed out something worth sitting with for a second. He described this as a shift in market structure, not just a price spike. The distinction matters more than it sounds. A lot of short-term rallies in crypto are driven by speculation, people jumping in because price is moving and hoping to catch a wave before it crashes. Anderson's read on this particular move is different. He's pointing to consistent buying demand as the driver here, which tends to hold up better under pressure than a purely speculative pump does. Here's how the move actually played out on the chart. XRP climbed as high as $1.158 before sellers stepped back in and dragged price down toward $1.145. If you're new to reading charts, that pullback might look like the breakout failing. It's actually one of the most common patterns after a real breakout happens. Old resistance, once broken, often turns into new support, almost like the market is testing whether the level it just broke through can now hold weight from below. Anderson is treating this pullback as a retest rather than a failure, and that's a meaningful difference for anyone trying to figure out what comes next. Since then, XRP has drifted a bit lower, down to around $1.12 based on the latest Coin Codex data. This is the part where a lot of people get nervous and start second-guessing the whole move. But zoom out for a second. A pullback after a strong breakout isn't unusual, it's expected. The real question isn't whether price dipped a little, it's whether buyers step back in to defend that zone over the next few sessions. That's the piece of information that will actually tell us something. So let's get specific because vague bullishness doesn't help anyone make decisions. Anderson has flagged 3 price zones that matter right now, and each one tells a slightly different story depending on how price reacts there. The first is the 1.14 to 1.145 range, which is the immediate battleground. If buyers reclaim this zone and hold it, that's the first sign that the breakout has real support behind it, rather than being a one-off spike. The second level sits at $1.155. This one matters because it sits just above where the recent high formed. A clean break above $1.155 would suggest the earlier peak wasn't a ceiling, it was a pause. That kind of move tends to draw in more buyers who are sitting on the sidelines waiting for confirmation before committing capital. The third level is the big one, $1.17 to $1.20. This is described as the most important resistance zone on the chart, and it's easy to see why. A confirmed break above this range could be a much stronger signal that XRP has shifted into a genuine uptrend rather than just bouncing around inside a wider range. On the other hand, if price gets turned away here again, don't be surprised to see XRP settle into a period of sideways chop, or even slide back toward those lower support levels we just talked about. Neither outcome would be shocking. That's just how markets test conviction. Now, charts only tell part of the story, and if we stopped there, we'd be missing some of the more interesting developments happening around XRP right now. Let's talk about what's happening on the ETF side, because this trend has been building quietly for a while without getting much attention. Spot XRP ETFs have now posted 9 straight weeks of net inflows, even while the broader crypto market has been cautious and choppy. In the most recent week alone, these funds pulled in another $17.2 million. That's not the kind of number that makes headlines on its own, but the consistency behind it is worth noting. Sustained inflows can suggest growing institutional interest, although they don't guarantee future price performance. There's another number worth paying attention to, and it might actually be more significant than the ETF flows. The XRP ledger is now home to more than $4 billion in tokenized real-world assets. To put that in perspective, That figure is over 4 times larger than the entire current XRP ETF market. That's a pretty striking gap. It suggests that a lot of the real activity happening around XRP right now isn't coming from traders buying and selling on exchanges. It's coming from actual institutions using the XRP ledger as infrastructure for representing real-world value on-chain. That kind of adoption tends to be stickier than speculative trading volume because it's tied to actual use cases rather than short-term price bets. Put these 3 threads together and you start to see why this moment is getting attention. You've got a technical breakout backed by real volume, currently in the middle of a retest that will either confirm or deny the move. You've got ETF inflows continuing for 9 consecutive weeks despite a cautious market. And you've got real-world asset tokenization on the XRP ledger growing to a scale that dwarfs the ETF market itself. Any one of these on its own would be worth a mention. All 3 showing up around the same time is less common, and it's part of why Anderson are paying closer attention than usual. That said, it's worth being honest about what this does and doesn't tell us. A breakout with strong volume is a real signal, but it's not a guarantee. Markets can reverse on macro news, on broader crypto sentiment, or simply on profit-taking after a sharp move. The reason Anderson keeps coming back to those 3 specific price levels instead of making a blanket prediction is because those levels are where the actual evidence will show up. If 1.14 holds as support, if 1.155 gets cleared, and if 1.17 to 1.20 eventually breaks, that's a very different story than if price stalls out and slips back into its old range. If you're holding XRP or thinking about it, the smartest move right now probably isn't to react to the headline number. It's to watch how price behaves at these specific levels over the next several sessions. Does the 1.14 zone hold when price comes back down to test it? Does volume pick back up as price approaches 1.155? Does the market show any real conviction near 1.17 to $1.20? Or does it get rejected the way it has in the past? Those answers will tell you a lot more than any single day's price move. So here's where things stand. XRP broke a resistance level that had held for weeks, did it on volume more than double the daily average, and is now working through a retest that could show whether this move has real staying power. Meanwhile, ETF inflows keep coming in week after week, and real-world asset activity on the XRP ledger keeps expanding well beyond the size of the ETF market itself. None of this guarantees where price goes next, but it does mean the next few sessions are worth watching closely, and we'll be tracking exactly that here on XRP Financial Horizon. If there's a specific level or scenario you want us to break down next time, drop it in the comments, and I'll see you in the next one.